All right, everyone. Good morning and happy Monday. Markets are a little volatile here, to say the least. Everything coming out over the weekend with the Deep Geek or Deep. What is it? Deep Seek. Whatever the deep is. Yeah, pretty good volatility here. We got the S&P futures down 2%, NQ down 3.5%, Bitcoin down 4%. And then, quickly going through a few of the bigger names here. Broadcom gapping down from 244 to 218 is a pretty good thumping. Microsoft down about $20. TSM is down about $20. Amazon down about $7. Tesla is down about 10 or $12. Nvidia down to 126. So big part of the volatility here is Nvidia, which we'll come back to. And then Apple. Look at little old Apple over here, flat. So kind of interesting. Market rallies for 10 days. Apple goes lower. Market pukes and Apple says, I think I'm going to hold up here. Google gapping down to 193. Kind of like that gap down. I am trying to buy Google. But point being, pretty nasty gap lower. And, going back in the past, I've had mornings where I'll wake up, I'll check the pre-market quotes. See QQQ down 3.5. See everything gapping lower. I've had mornings where that kind of gap lower can almost make you physically sick. Too much risk on the table, too much cash at work. 5 o'clock in the morning, you already know it's going to be a pretty uncomfortable day. Big part of trading is keep in mind things like this can happen. News downgrades, the Fed, whatever the case might be. You might catch that big overnight gap. Good reminder, if anything, when we're dishing out the risk, it's one thing to say, okay, I'm gonna buy $2,000 worth of Meta calls, and I'm comfortable with that $2,000 of risk. Easy to say that. Then you wake up to a huge gap down. Then you figure out, are you actually comfortable, with that $2,000 of risk? So if anything, a big gap down is a, good reminder of that. But a few things that I like to look at. What you want to do on a day like today, don't react like tough thing to do, of course. Don't react like a human. Right, that space between your ears. Oh my God, market's gapping down. I'm going to lose money on this trade. I'm taking a hit over here. You kind of go into panic mode. You quickly try to fix all your problems. All right, well, I'm long Nvidia, and damn it, now Nvidia's gapping down. So I think I'm going to put a huge short position on the QQQ. You jump in trying to quote unquote fix your problems. A lot of times can lead to bigger problems. So a couple of things I do on a morning such as this one. Before I'm looking at my open trades, my open risk, first thing I'll kind of ask myself is, well, how am I doing here overall? Into today, into the gap down, how have I done over my last, 10, 15, maybe 20 trades? So for the folks in my room, our last 10 trades here, we have 8 winners and 2 losers. So heading into the gap down here where things might get a little iffy out there, we've been doing some pretty good trading. Look a little bit further into it. The loss on coin, basically break even, negative 9%. That 100% loss on Meta, that was a small lottery trade. Think we look at our last 20 trades, we only have like a total of 4 or 5 losses. So heading into the gap down, overall, we're doing some really good trading here. The point I'm trying to make there is all these trades, like our last 10, 15, 20 trades, they were all taken for the most part in a better market. Big part of trading is when things are more aligned for, for clarity, for edge, clear direction. When the stars kind of align for you, you got to jump in and take advantage of it. You do your work when things are good. You're putting together good numbers. You can, you're in a better spot to afford a couple of trades going against you. Yeah, the point I'm trying to make there. So those are a few things I look at. How am I doing as of late? Am I doing all right? Am I doing really good? The last thing I want is, all right, I'm I'm on a pretty tough stretch here. My last 10 trades, I've got 8 losses. Well, if I'm in that position, maybe I'm not taking risk into the weekend. So thinking through that lens, and then the other question here is, for my open trades, how much risk do I have on the table? Is it a morning where I'm waking up, the market is gapping down, and I've got 10% of my account in Nvidia, I've got 5% in Google, another 5% in Meta. Am I waking up with 10, 15, 20, 30, 40% of my account invested, or it might maybe a little bit smaller in my size? So for our 2 open trades here, and then real quick going back to the sheet, here we are. All right, so now as of this morning, we've taken a loss in Bitcoin, and we have open trades in Meta and the SMH. So 1 closed, 2 open. And then, looking at the Bitcoin trade here, and again, this is just how I think to keep everything in, I think the proper perspective. Like I've always done my worst trading when I make things very much about that one given trade. All right, I'm going to strap myself to Bitcoin, and this Bitcoin trade is going to be the end all be all. My job is basically putting together, a pretty spreadsheet. More wins and losses, all the above. So when I look at the Bitcoin loss, I'm not going to get too bummed out about it. We're losing about 6,900 points on this trade. 4 or 5 days ago, we closed the trade on Bitcoin for about 5,800 in our favor. All right, so in that light, the loss on Bitcoin this morning, not all that devastating. Between that trade and that trade, not quite a scratch, but pretty damn close. All right, now I got to deal with the SMH and Meta. So first question there is, how much risk do I have on the line? Is it a case where on the gap down, I'm going to really be in trouble? I'm giving back way too much of my account, or are things a little bit more light? So for the Meta trade, let's go see where she's going to open. That rascal Meta. Looking like a move down to 630-ish, which frankly, I don't think all that bad. We're buying it back here on that candle. And yeah, don't get me wrong. I love buying something on a Wednesday, and then you're going out with the highs on Friday's close, right? It feels good. You're getting the euphoria. You feel comfy. Trades off to a nice start. Well, if I'm buying it at 625 and they close on Friday at 630, right? Where we're going to open this morning, I still like the trade. Maybe not breaking out too quickly, but I still like the setup. So I think it's still going to be in pretty decent shape here, but more importantly, risk on the table. Meta has earnings coming up on Wednesday, so we're jumping in, taking a lottery trade here for earnings. Lottery trade meaning putting the gap down aside. We structured a trade here that we're going to hold through the announcement, right? Going to hold through the catalyst. We're going to hold through something that could lead to a big gap down. Turns out we're getting one without having to get earnings. But point being, we sized this to accept the max loss. Not a trade I'm going to wake up and stress about. Whether it turns into a max loss because of the SeatGeek or the DeepSeek, whether they gap it down 30 points after earnings, I've already positioned for the max loss. Right, so I'm not going to stress that one. And then for the SMH here, gapping all the way down to 245. Not putting makeup on a pig here. We are going to get a handful of pretty ugly gaps lower. 260 down to 245. That is a pretty good thump in there for the SMH. But we're buying it a couple of weeks ago. Knowing based on the big weekly squeeze, we might be a little bit early. Good structure, good trend, all the above. We never got that momentum turn. Took that into consideration, took Nvidia's bad behavior into consideration. Right, we're all the way out in April with a third of our typical size. Or at least for me personally, that's how I've taken the trade. So if my typical risk is, say, $10,000, I'm risking about $3,000 for now. Not on calls that expire today. or calls that expire this Friday, they expire about 80 days down the road. All right. So for those of you in our room or in my room, again, not enjoyable. My preference is, hey, Monday morning NQ is up 3.5%, 4%. But putting everything, in its proper perspective, I don't think too bad of a gap down for us. Meta pulling back to 630. Again, if it closed at 630 on Friday, I would still say, hey, that's one of the cleaner setups in the market. So I can't get all emotional about, buying it back here. They're pushing. I'm feeling good, and now they're pulling it right back. If you read read Mark Douglas's book, a big part of what he talks about is expectations. Kind of tough not to buy something and have an expectation. Where we should have expectations is over the course of, every 25, 50, 100 trades we take using a certain system. That's my belief. That's been my experience. If I can take 100 daily squeezes in a row that all look like Meta did here, my expectation is after trade number 100, between all of them, I'm going to have a really nice net profit. I'm going to work that edge over the course of a series of trades. That's the tougher thing to do. What we tend to do is, all right, I'm buying Meta. All right, I'm going to make it all about Meta, and I've got the full expectation we're going right into $700. Now on the gap down this morning, it's you take it a little bit more personally. So for Meta, nothing to do there as far as management, and then for the SMH, one thing to consider for a lot of these things that are going to gap down. And again, I'm not trying to put this in, not trying to put lipstick on a pig or anything. It's an ugly gap down. Take Nvidia for example, though. One thing we do have working right now, S&P's QQQ, NQ, ES, Nvidia, Amazon, all the above. They're working a lot of bigger time frame squeezes. Weekly time frame, 3-day, 2-day daily squeeze. Right now, all these bigger names are going through that phase one. Right, phase one of your squeeze is build up the energy. Now, the reality of that phase one is nobody really enjoys that. Myself included. So here's Nvidia back in 2023. The purple lines I got on my chart. Let me grab this bad boy. All right, so these purple lines, those are our the Keltner channels. Right, they measure one average true range move above our 21 EMA, and then one average true range move below that 21. All right, and my definition of the squeeze is we're going through the process of building up the energy in that +1, -1 ATR box. Whether it be a 5-minute squeeze, whether it be a 15-minute, 30-minute, or a weekly, when you're going through that compression phase, that's pretty typical behavior. They're going to pop it a little bit to +1. They might flush it down to -1. It's a lot of ugly, nasty back and forth chop that eventually can lead to phase two of the squeeze, the sweet release of the energy. And every trader on earth loves that part. Even if they don't watch a squeeze unknowingly, they all love when a squeeze fires. And Nvidia's farting around +1, -1, +1, back and forth. Then the squeeze breaks. Then you're getting that good action. Clear direction, breakout, follow through, all the above. Tough part is when you're in that compression phase, it can take a little longer than we would like. But I think if you can look at things through that lens, sometimes puts things, I think, in more of a healthier perspective. So looking at Nvidia currently, right, and I'm not saying anything about you buy Nvidia today, you short it. I think it's going higher. I think it's going lower. I'm probably not going to have any opinion on the market until we get through the Fed on Tuesday. But from a squeeze perspective, all right, so this will be the second week that Nvidia is printing a weekly squeeze. All right, and exactly like the one we had back here, in the context of that compression phase, what would be very normal action? A lot of ugly ass back and forth between that purple line and that purple line. Now, they do that on a 5-minute squeeze every day. Um, nobody really bats an eye. Smaller time frame, tiny range. Granted, for NVIDIA, we're talking 145 all the way down to 120. It's a big range on an hourly chart or even a daily chart. Right? There's going to be big swings. Point I'm trying to make is respect the fact that we've gone from pushing to, all right, got to catch my breath, got to build up the energy, got to keep on working that squeeze. And while I'm doing that, expect anything from that purple line down on that purple line. Normal action on a weekly squeeze. All right, so take that to the QQQ futures. All right, first candle of a brand new weekly squeeze. All right, chopping from 21,700 all the way down potentially to 20K. And during that chop, we can look at our indicators. As we go through this building the energy phase, are we bullish? Are we neutral? Things are getting a little more bearish. Not my opinion, but the indicator's opinion. It's a pretty bullish weekly chart. 13 points out of 15, bull trend, bull structure, little negative momentum cross. Now, I'm not going to buy that today. I don't have an hourly buy signal. I don't have a 30-minute. But that gives me some important context. The gap down is ugly, but we're gapping down into what? The NQ gaps down into a weekly squeeze, brand new weekly squeeze, in an uptrend with really good structure. We might be here, 4 or 5 weeks down the road, looking back at the weekly squeeze, saying thank you. You led to our next big move, or maybe even our next big flush. When that begins to fire, that's when I know we can jump in and make some good money. So the key in the meantime is, all right, I'm shorting the gap down, and then they're popping it. So I'm gonna close my short, and now I'm buying calls, and they're flushing it. All right, you're going back and forth, you're shucking and jiving, you're getting torn apart in a big squeeze. So imagine you're losing your shirt back here, and then you're not in a good position to jump in, get long, ride that easier breakout. But major point I'm trying to make is, that range inside of a weekly squeeze. Take a name like the SMH, for example, which we're long. As far as that weekly squeeze goes, really anything under 260 above 233. Right, and I'm not talking about the 5-minute time frames, etc., but just that, for the sole purpose of our weekly squeeze, couldn't be any more meaningless. It's just noisy chop. And again, I don't love the fact I bought it back here. I'm getting a nice push, and now I got to sit through a gap down. Nobody's ever going to enjoy that, but it's a weekly squeezing. Oh my God, it's bearish. We're going to die. Bounce off a -1, and then, oh my goodness, here comes the breakout, and we're getting rejected, and we're popping, we're flushing. Tough to make money in that. I think also tough to want to read too much into the back and forth. They break that level, look out below. They're probably going to fire the squeeze short. At that point, likely leads to a really big flush lower. Or you wake up one morning, they're breaking back above 260, they're getting that momentum shift, and it will be the path into 290, 300. What I don't want to do is, one, panic inside the squeeze, but also, force my agenda, force the issue while we're going through all that back and forth. My preference is get back above 250 and, finish the week up back at the highs. Have to respect the fact what it's been doing all the way since back here in September is just a weekly squeezing. So putting the emotion of a $15 gap down aside, it's more of the same there. Honestly, same thing for NVIDIA. They go break it under 120, different conversation. But what has NVIDIA been doing for 4 or 5 weeks now? It's just chopping like crazy. It's also been in a 3-day squeeze or a daily squeeze for the last handful of weeks. So, point I'm trying to make is, if you kind of take that 40,000 foot view of the market here, one, we are coming up into some pretty big catalysts. We got the Fed tomorrow. We have earnings coming up on Wednesday. Um, but my overall thought is we're just very stuck right now, and the unenjoyable part of the squeeze, which is that phase of compression. Right? I don't enjoy it. I don't think any of you enjoy it. Um, and I'm also not saying, hey, you can't jump in here and find a few good trades. Don't get me wrong on that either. They take Nvidia from 145 down to that 120. Okay, yeah, bigger picture doesn't change too much about the weekly squeeze. But hey, it's also a 20-point flush. You could probably jump in there and find a few good shorts. Or they take it from 130 back in the 145. Yeah, might not change much bigger picture, but you can maybe jump in, catch that $15, $20 pop. I'm talking more so this morning, bigger picture. Nvidia down to $100 per share, or Nvidia up to 170. Either or will probably be the outcome when that weekly squeeze fires. So buckle up, shall not be dull. But yeah, for those of you in my room, game plan for open trades is meta. No change in the game plan here. It was a lotto when we bought it. It will remain a lotto. To be fair, though, if earnings weren't in a couple of days, I would be looking to buy more at the open. Not, hey, market open, and here I am buying calls, right out of the gate. But I don't think a flush down to 630 changes anything. A break under $600 changes things here. So Meta will be on the watch list for another entry after earnings, or they gap it up and they take our calls with it. And then game plan here for the SMH. And again, part of my game plan for one given trade is not just hey, what's going on here with that one given trade? How have I done over my last 10 trades? Well, if I'm on a 9-trade losing streak, you know what I should probably do at the open? Close everything, get rid of everything, go to cash. I'm on a losing streak. It ain't getting better here at the open. I should go to cash and just step away for a bit. So when I look at, all right, how am I going to manage the SMH trade? I do take into consideration how have I been doing as of late. Mostly wins, mostly losses, all the above. So being that we've been trading pretty good as of late, and then being that the SMH trade expires all the way out in April, and then being that we only have a third of our typical position size, I'm inclined to do nothing at all here on the gap down. Not looking to cut it, not looking to buy more. Going back to what I said earlier, big part of trading is you have to be on point when things are lined up. That affords you a lot of luxuries. And I'll show you what I'm talking about. Let me get the Big Ten chart. So here's a chart of what I would consider to be my market. So these are my 10 watch list names on a weighted index. And when this chart lines up for a push, that's when I make my most money. All right, so back in November, December, perfect weekly squeeze, perfect 3-day squeeze, perfect 2-day squeeze, perfect daily squeeze. The stars have aligned kind of moment. Jumped in, took advantage of it, did it with decent size. Did our job. We were supposed to do our job. Now, while we're waiting for another moment in time like that, doing our job back there when things were lined up affords us a few luxuries. One, we can be patient. I'm going to force the issue back and forth here in the chop. And if I got a couple of trades on, smaller size, maybe coming against me a bit, can give them a little bit more breathing room. I'm on a losing streak. I'm waking up a big size on. And then I think you got to approach things a little differently. But yeah, for those of you in my room, that is my game plan. That is my thought process. And yeah, not looking to do anything initially here. If we take a look at the NQ, and if y'all remember from a few weeks ago, and who knows, get through this week, this might finally change. But on that pullback from the highs to our weekly 21, the fact we had a bullish weekly chart, it's pretty much what kept me from getting really bearish. Like, yeah, we're pulling back. Yeah, it's all pretty nasty. But from the weekly charts perspective, nothing's wrong here. Buy signals, perfect structure. We're just pulling back to the buy zone. I'm going to have that same thought process until that changes. I can look for a few shorts. I can look for a few scalps. I can go have my fun out here on the short side, but I'm not looking at a bearish weekly chart. Could change by the close, could change by Friday, but at the moment, it's a brand new squeeze. Doing what a squeeze does, right? Plus 121 EMA, plus 121 EMA, and the indicator likes it. I'm not going to think about jumping in and buying that until I get a 30-minute buy signal, 1 hour, 2 hour. No doubt on the gap down, bulls will have a lot of things they have to fix. If they do want to hold it up, turn the corner, and try to go higher. But till that picture changes, I can't really jump in today. I'm going to buy every put out there. Break that weekly 21, cancel the bullish signals. Then we'll be talking shorts. And we'll break out the shorts. Be patient this week. Hope a few of those things were helpful to you. Yeah, like I said, I've had mornings where I'll wake up to a gap down like this and can almost make you nauseous. Big goal of mine is making sure I don't put myself in a position where I can wake up to a morning like that. So what am I waking up to this morning? Annoyances. Little pains in the ass, but nothing painful, account-wise. Yeah, I was long Bitcoin. They stopped me out overnight. Maybe they shook me out, but not an account blower. Yeah, the SMH is gapping down. Preference is they gap the thing up 80 points, but I don't think I'm ever going to have a 100% win rate. So all things to keep in mind in the context of pretty volatile gap down coming your way here. Check Meta again. Meta 625-ish. Google's another one where I've been looking for a dip, and now I'm getting the dip to buy it. If they can hold Google right around that 193, 195, it will be tempting. But it won't be a Google thing. We got to figure out what kind of market do we have now. I promise, guys, one day we'll be in the trending market. Tough to imagine right now, I know. But one day we will be back to a trending market. Right? What does a squeeze do? Chops it back and forth, plus one, minus one, until they finally pick a direction, go on the fire the squeeze. So on the NQ daily, in a daily squeeze, what are we doing here for the last month? Minus one, plus one, minus one. Little break, popping back above it. Push it all the way back to plus one, and we're flushing all the way back down to minus one. They're doing it in a pretty violent fashion, mind you. But it is just a daily squeezing. Couple of closes back up here, then they're looking to break it long. Couple of closes down here, then they're looking to break it short. That means you might be at a point where you can call for direction, and actually buy those puts or buy those calls. But we are trapped in a daily squeeze. We are trapped in a 2-day squeeze. What is our 2-day time frame doing? Plus one, minus one, plus one, minus one. What is what is our 3-day squeeze doing? It is just 3 days squeezing. Yeah, not quite down to -1, up to +1. Yeah. So I can't call for when and I can't call for which direction. But the beauty behind all the ugliness right now is we have these bigger time frame squeezes trying to work. Just take that QQQ 3-day squeeze. If they break it short, we are out of that box and probably flushing down towards our -3 ATR target. All right, chop it, chop it, chop it, and then walk it down towards the target. Which kind of price action is easier to be short? The back and forth ping pong or the break in the continuation? That's way easier to jump in and make money on. Or they get a couple closes up here, break the squeeze long, and they're cranking into 23,200. What's easier to be long? All the back and forth or that breakout clear direction? Don't know which way, don't know when, but eventually, that should be the outcome here from this big multi-squeeze. And I think that adds a little bit of fuel to the fire. If we just had a 3-day squeeze, all right, that's one thing. We have a weekly, a 3-day, a 2-day, and a daily. Meaning when one of them fires, that should go on the trigger the next one. That goes on the trigger the next one. It is a beautiful process when it all begins. But all right, y'all. What time is it here? 9:18. So no time for Q&A in this room this morning. I got to jump over into my room, get the troops ready for the open. But yeah, sorry for blabbing so long. But I tell you what, if you did have questions, drop them in the chat here for me. And when I'm done over in my room later in the morning, I will jump over and poke my head back in here in this room. But all right, guys, I wish y'all the best of luck. Hope you found a little bit of that discussion helpful. And then, yeah, my overall take on the market right now is just that, on the important names, on bigger time frames, we're going through the unpleasant part of the squeeze. Eventually, you get the light at the end of the tunnel. Big breakout, big continuation, big break lower, ugly flush, all easier to trade. So, biggest piece of advice is, when that morning or that day comes, they're breaking it lower, squeeze break short, they break it out, squeeze breaks long. Make sure the things that you're doing right now don't keep you from taking advantage of that move. I'm getting long and short 50 times in here. Then the squeeze finally breaks. I might be laying there licking my wounds as opposed to saying, all right, now it's go time. Let me jump in, get the size on, and do the do. But all right, y'all, thank you again. Any questions, drop them in the chat. I shall pop back in here later. And then, back with you on Wednesday morning. Adios.